This is Chicago's very own WGN Evening News at 5.
More on to our top story we told you about earlier. The Dow dropped nearly 600 points this afternoon.
Yeah, it's been a rough, several days in a row. Michael Ruggiero from Ameriprise Financial in Orland Park joins us to talk about the volatility and what it means to you and me, the investor. Thanks for coming in, Michael.
Thanks for having me back. I appreciate it.
So, a wise man said before the 2008 crash, I held on to my stocks when it crashed, waited, and by the time everything zoomed back up to now, I was better off than before the crash. Is that the same kind of philosophy you would suggest to investors right now?
Yes. Don't panic. There's no need to at this time. And to be clear, this is not the 2007, 2008 financial crisis. The fundamentals of the U.S. economy are still in place. Consumer spending is good. Corporation balance sheets are strong. There's a lot of cash available to them. FICO scores nationwide have increased, which means people are using their money to also pay down their debt. These are all good things. So the fundamentals in the U.S. economy are in place. Panicking should not be your strategy at this point in time.
So those are the positives. What are the negatives to this?
Well, we have to be concerned about China because that is the leader in the global economic potential slowdown here. Them devaluing their currency 3% or more within the last month was a signal that they are slowing down. They could be entering a recessionary period. And we do have to be concerned about that because, well, I mean, it's China.
Yeah.
And so there's
huge.
Yeah. So you have to be careful about that.
Michael, for those that don't necessarily understand the stock market, they've got a wise financial analyst on your behalf saying, don't panic, relax, just hang in there. Who is panicking? Why is the market tanked 1,000 points over the last 3 days?
Well, again, I think it's a lot of fear-mongering. Again, they're worried about China. They're worried about what the Fed may do regarding interest rate hikes potentially in September. And they're not focusing, again, on the fundamentals, which I had mentioned earlier.
Is there a way to safeguard for future things like this happening, future drops? Can you safeguard things at all? Or?
Well, it depends on your risk tolerance at the time. If I were to ask you what your risk tolerance is on a scale from 1 to 10, and you said, well, it's an 8, well, then I would position your portfolio 80% into equities. And
which are risky?
Yeah, but your risk appetite is 8, and then another 20% into fixed income or cash security, things
so
of that
start
nature.
Diversifying, then you're saying?
Well, start diversifying and be aware of what your goals and objectives are moving forward. But at this time, panicking, I don't think it should be a strategy.
Right, because long term, let's say you're a 40-year-old person, you've got 3 kids, and a lot of your investments are in the stock market, whether it be mutual funds, what have you. You've got a long time to make up for a dip like this.
You have a long enough investable timeline, yes, to make it up. If you are someone that is nearing retirement or near retirement, then yes, you should be concerned, but you should also be positioned accordingly before this happened. This correction shouldn't really be a surprise to anybody.
Right.
Okay. Michael Ruggiero, thank you very much for Ameriprise Financial in Orland Park.
Yes, thank you very much.
Thank you,
I appreciate it.
Thanks for coming in.
All right.